the private equity housing trap, the rentership society. There's a fundamental lie that has defined the American experience for the last 75 years. It's the idea that if you work hard, save your money, and follow the rules, you will eventually own a piece of this country. You will own a home, you will build equity, you will have a castle that is yours, a foundation of wealth that you can pass down to your children. But right now, in 2025, that dream isn't just dying, it is being executed. You feel it when you look at Zillow. You feel it when you see home prices doubling while wages stagnate. You feel it when you save for a down payment for 5 years, only to realize the target has moved so far that your savings are now worthless. And you're told it's just supply and demand. You're told it's just interest rates. You're told it's just inflation. They are lying to you. What is happening to the housing market is not a natural economic cycle. It is a hostile takeover, a coordinated, mathematical, and ruthless acquisition of American neighborhoods by the largest financial institutions in the history of the world. We are witnessing the end of the property-owning democracy and the birth of a new economic system. It doesn't have a name in the textbooks yet, but if you look at the structure, the hierarchy, and the flow of money, it looks exactly like the system we thought we escaped 500 years ago. Neo-feudalism. A society where a tiny elite owns the land, and the vast majority of the population pays them for the privilege of existing on it. This is the story of how Wall Street decided to monetize your shelter. How they turned the American home from a place of safety into a financial asset on a balance sheet. And how they plan to turn you from a citizen into a permanent tenant. This isn't about housing. This is about control. And we are already in the final stages of the trap. To understand how we got here, you have to understand that for Wall Street, a house is not a home. It is a yield generator. For 50 years, the single-family home was off limits to big money. It was too messy, too fragmented. If you're a hedge fund managing $50 billion, you don't want to deal with fixing toilets in Ohio or mowing lawns in Arizona. It wasn't scalable. So, for decades, the housing market was the one place where the average American had a fair fight. You were competing against other families, not multinational conglomerates. But then came 2008, the great financial crisis. We've talked about 2008 before as a banking crisis or a debt crisis. But in the context of housing, it was something else. It was the greatest transfer of property rights in modern history. Millions of Americans were foreclosed on. The banks took the homes. And for a moment, the banks didn't know what to do with them. They were sitting on billions of dollars of distressed assets that were losing value. And that is when the predators arrived. Firms like Blackstone, Colony Capital, and Waypoint Homes looked at the wreckage of the American middle class, and they didn't see a tragedy. They saw an arbitrage opportunity. They saw that they could buy thousands of homes for pennies on the dollar. But they needed a way to manage them. They needed technology. They needed scale. And the U.S. government helped them do it. The Federal Housing Finance Agency, Fannie Mae, and Freddie Mac started bulk selling foreclosed homes to private equity firms. They didn't sell them one by one to families trying to get back on their feet. They sold them in bundles of hundreds and thousands to the guys with the deepest pockets. This was stage one, the acquisition. Between 2011 and 2017, institutional investors bought over 200,000 single-family homes. But that was just the pilot program. That was just the proof of concept. They proved that if you use algorithms to buy, centralized software to manage, and aggressive legal teams to evict, you can turn a neighborhood into a factory. A factory where the product is shelter, and the raw material is your monthly income. Now let's look at where we are today, because the game has changed. They aren't just buying foreclosures anymore, they are buying everything. And they are doing it with advantages you can never match. This is the mechanism of the trap. Imagine you are a young couple. It's listed for $400,000. You offer asking price. You write a nice letter to the seller. You pray. And then you get the call. You lost. Someone else offered $450,000, all cash. No inspection contingency, no financing contingency. Closing in 10 days. You can't compete with that. You assume it was a rich person from California moving in, but it wasn't. It was an LLC. A limited liability company buried in a maze of subsidiaries, ultimately owned by a real estate investment trust, REIT, or a private equity fund. They didn't look at the house. They didn't walk through the kitchen. They didn't care about the school district rating for their kids. An algorithm scanned the zip code, calculated the potential rental yield, analyzed the migration patterns, and determined that at $450,000, this asset would generate a 6% return on equity. The algorithm made the offer instantly. The money was wired from a fund holding billions in capital. The deed was transferred, and that house was removed from the ownership market forever. It will never be sold to a family again. It has crossed the event horizon. It is now a rental unit in a portfolio. This is happening thousands of times a week. In some zip codes in Atlanta, corporate investors bought 40% to 50% of all homes sold in a single quarter. They are targeting the specific type of home that you want, the starter home, the affordable home. They aren't buying $5 million mansions. The yield isn't there. They are buying the $300,000 to $500,000 homes, the exact rung on the ladder that the middle class needs to escape renting. They are sawing off the bottom rungs of the ladder one by one. And here is the perverse part. They tell you that high interest rates are here to crush inflation. But high interest rates are the private equity firm's best friend. Why? Because high interest rates destroy your own buying power. Well, when rates go from 3% to 7%, your monthly payment doubles. You're forced out of the market. You can no longer afford to buy. But Blackstone? Invitation Homes? American Homes 4? Rent? They don't care about 7% mortgage rates because they don't take out 30-year fixed mortgages. They have access to capital markets. They have billions in cash. Or they borrow at corporate rates that are far lower than what you pay. So, when the Fed raises rates, they aren't punishing the big guys. They're clearing the playing field for them. They are eliminating the competition. And the competition is you. This leads us to stage 2, the financialization of shelter. You need to understand that to these firms, your house is not a physical structure. It is a financial instrument. It is a bond that pays a monthly coupon. That coupon is your rent. And just like they securitized mortgages in 2008, they are now securitizing your rent. It's called a rental-backed security, RBS. Here's how it works. A firm like Invitation Homes bundles 3,000 houses into a single financial product. They take the expected rental income from those 3,000 families, package it into a bond, and sell it to investors, pension funds, insurance companies, sovereign wealth funds. The investors get a steady payout derived from your rent checks. But here's the danger. Once you turn rent into a bond, you have to protect the payout. You have promised investors a certain return. If rents go down, the bond loses value. If vacancies go up, the bond loses value. So the corporate landlord is under intense pressure from Wall Street to ensure that rents never go down. They must only go up. They have a fiduciary duty to their shareholders to squeeze every dime out of that property. This is why your rent went up 20% last year. It wasn't because the landlord's costs went up 20%. It wasn't because they installed gold toilets. It was because the algorithm determined that they could push it that high. And you have nowhere else to go. They are creating a cartel. In the old days, you had thousands of individual landlords in a city. They didn't talk to each other. If one guy raised rent too high, you moved down the street to a cheaper place. There was competition. Today, you have 3 or 4 giant firms dominating entire markets. And they all use the same software to set prices. Software like RealPage. It's an algorithm that collects data from landlords and tells them exactly what price to set. It suggests, hey, everyone else is raising rents by $100, you should too. It creates artificial price fixing without the guys ever having to meet in a smoke-filled room. The algorithm coordinates the cartel, and because they control the supply, they control the price. This leads to stage 3, the build-to-rent revolution. For a while, the constraint was supply. There were only so many old houses to buy. So the private equity firms decided to stop waiting for you to sell your house. They started building their own. Drive through the suburbs of Phoenix or Dallas or Jacksonville. You will see brand new subdivisions popping up. Beautiful signs. Luxury living. Community pool. You pull in. You see rows of brand new, sparkling 3-bedroom homes. And you think, finally, some inventory. Maybe I can buy one of these. You walk into the leasing office and you ask, how much are these selling for? And the agent looks at you and smiles. Oh, these aren't for sale. This is a build-to-rent community. The entire subdivision, all 200 homes, is owned by a single corporation. Not one of them will ever hit the open market. They are bypassing the ownership model entirely. They are industrializing the landlord business. Builders love it because private equity writes them one check for the whole neighborhood. They don't have to sell 200 individual homes to 200 picky families. Local governments love it because these communities are professionally managed and generate tax revenue. The only person who loses is you, because entire swaths of land, entire zip codes of development are being designated renters only. They're creating a permanent underclass of people who are physically excluded from building equity. This is the creation of the rentership society. And it's not just about money, it's about the quality of your life. It's about freedom. When you own your home, you are the king of your castle. You can paint the walls, you can plant a garden, you can fix the sink. When you live in a corporate-owned rental, you are a line item. Read the reviews of tenants living in these homes. It is a nightmare of automated bureaucracy. The sink breaks? Oh, you don't call a handyman. You submit a ticket to a portal. Maybe someone comes in 3 weeks. Maybe they don't. You want to paint a room? Violation of lease. You miss rent by 1 day? The algorithm automatically files for eviction. There is no human to plead with. There is no landlord who knows you lost your job and gives you a break. There is just a relentless, unfeeling machine designed to maximize yield. And the fees. Oh, the fees. Smart home fee. pet administration fee, maintenance concierge fee, listing administration fee. They have figured out how to monetize every aspect of your existence in that house. It is the Spirit Airlines model of housing. The rent is just the base fare, everything else costs extra. This is what happens when you turn a home into a financial asset. The human element is stripped away. Efficiency is the only metric that matters. And efficiency for them means extraction from you. Now, let's look at the end game. Where does this lead? We are moving toward a society that looks fundamentally different from the America of the 20th century. In the 20th century, the middle class held the majority of the wealth, and that wealth was concentrated in home equity. In the 21st century, wealth is being concentrated in financial assets held by the top 1%. If housing becomes a subscription service, the primary vehicle for middle-class wealth creation vanishes. Think about the math. If you buy a home at 30, pay it off by 60, you enter retirement with a free place to live and an asset worth hundreds of thousands of dollars, you have security. If you rent forever, you enter retirement with nothing, and your rent keeps going up. How do you retire when your rent is $4,000 a month and Social Security pays $2,500? You don't. You become dependent on the state, or you work until you die. This creates a society of extreme inequality, a society of lords and serfs. The lords are the shareholders of Blackstone, BlackRock, Vanguard, State Street. They own the land. They own the bricks. They own the soil. The serfs are the rest of us. We pay the lords for shelter. We pay the lords for food. We pay the lords for entertainment. We own nothing. And despite what the World Economic Forum says, we are not happy. This is stage 4, neo-feudalism. And the scary part is, it is self-reinforcing. The more homes they buy, the more equity they have. The more equity they have, the more leverage they can use to buy more homes. It is a snowball rolling down a hill, getting bigger and faster, crushing everything in its path. They have a distinct advantage called the cost of capital. When a giant fund borrows money, they pay a lower rate than you. When they buy insurance, they get a bulk discount. When they buy lumber or appliances to fix up houses, they pay wholesale prices. You're buying retail, they're buying wholesale. You cannot compete with that math over the long term. Unless something changes, the trajectory is clear. The homeownership rate will plummet, the rental rate will skyrocket, and the political power that comes with property ownership will evaporate. Remember, property rights are the foundation of political rights. People who own their communities care about their communities. They vote, they show up to school board meetings, they have a stake in the future. Transient renters, who can be evicted at the whim of an algorithm who have no equity in the neighborhood, do not have the same political power. This is how you hollow out a democracy. You turn citizens into consumers. So why isn't the government stopping this? Why is Congress allowing hedge funds to buy up the American dream? Because they are in on it. Follow the money. Who are the biggest donors to political campaigns? The financial sector. Who hires the regulators when they leave government service? The private equity firms. There's a revolving door between Washington and Wall Street. And there is an even darker truth. The government needs home prices to stay high. Local governments run on property taxes. If home prices crash, their budgets collapse. The Federal Reserve needs asset prices to stay high to keep the banking system solvent. If housing prices fell 40% to affordable levels, the banks would fail, the pension funds would collapse, and the economy would implode. So the system is rigged to keep prices high, and high prices favor the entity with the most capital. That isn't you, that is private equity. They have trapped us in a cycle where the only way to keep the economy going is to make the population poorer in real terms, to make you work harder, for longer, to afford less. But there is an even deeper layer to this trap. It's the pension fund paradox. Where does Blackstone get the money to buy these houses? They don't just print it, they raise it. From whom? From public employee pension funds, from teachers' unions, from firefighters' funds, from university endowments. It is very likely that your own retirement money is being used to outbid you on a house. The pension funds need a 7% return to pay out benefits. Bonds aren't paying enough. Stocks are volatile. So they hand the money to private equity and say, find us yield. Private equity takes that money, buys your neighborhood, raises the rent, and sends the profits back to the pension fund. You are being cannibalized by your own capital. It is a perfect closed loop of financial extraction. The snake eating its own tail. So what happens next? What does the future look like if this continues? We can look to Europe for a glimpse. In countries like Switzerland or Germany, renting is the norm. Home ownership is low, but there is a difference. In those countries, tenant protections are strong. Rents are stabilized. You can live in an apartment for 40 years and never fear eviction. The American version of this will not be benevolent. It will be ruthless. It will be the gig economy applied to housing. Dynamic pricing for your apartment, surge pricing for rent. Imagine getting a notification on your phone. Demand for housing in your zip code has risen. That technology exists. They are testing it. We are moving toward a world where your biggest expense, shelter, is variable. unpredictable and maximized by an AI tasked with draining your bank account. This brings us to stage 5, the consolidation. Eventually, the smaller landlords will be wiped out too. They can't compete with the efficiency of the giants. They will sell out. We will end up with an oligopoly, 3 or 4 mega corporations owning 20% or 30% or 40% of the single-family rental market in major cities. At that point, they are the market. They are the utility company. You pay the electric company because you have to. You pay the water company because you have to. And you will pay the housing company because you have to. Housing becomes a utility, a service you pay for forever but never own. This is the ultimate goal, the subscription life. You subscribe to Netflix for movies. You subscribe to Uber for transport. You subscribe to Blackstone for shelter. You own nothing. You control nothing. You are a user, a source of cash flow. And the wealth gap widens until it becomes a canyon that no ladder can bridge. Is there any hope? Is there any way to escape the trap? There are rumblings of pushback. Some neighborhoods are changing their HOA covenants to ban corporate ownership. They are saying you can only buy a house here if you actually live in it. Some politicians are introducing bills to limit the number of homes a single entity can own. The End Hedge Fund Control of American Homes Act was introduced in Congress. It would force these firms to sell off their portfolios over 10 years. But don't hold your breath. The lobbying power against these bills is immense. The money is too good. The more likely scenario is that this trend accelerates. They will use the next recession, the one we've talked about in previous videos, the crash of 2026 or 2027, as the final shopping spree. When the economy cracks, when regular people lose their jobs and are forced to sell, private equity will be there. They are sitting on trillions of dollars of dry powder, cash waiting on the sidelines. They are waiting for the blood in the streets. They are waiting for you to fail. So when the next crash comes, they will scoop up another 500,000 or 1,000 homes. They will consolidate their hold on the American landscape. The window to secure your own castle is closing. This is why understanding the trap is so important. You need to see the game board. You need to understand who you are playing against. You aren't playing against the nice couple at the open house. You are playing against a $1 trillion balance sheet. You need to get your financial house in order. You need to get out of debt. You need to save aggressively. You need to be ready to strike when the market dips, before the institutions do. Because owning your home is no longer just a financial goal. It is an act of rebellion. It is the only way to opt out of the neo-feudal system they are building. If you own your land, you have a shield. If you rent, you are exposed to the algorithm. The private equity housing trap is real. It is happening in every major city in America. It is happening in the suburbs. It is happening in the exurbs. They are buying the future, one deed at a time. The question is, are you going to let them buy yours? History tells us that when a class of people creates a monopoly on land, it leads to serfdom. We fought a revolution to escape that system. Now, we are voluntarily signing leases to return to it. If this opened your eyes to why the housing market feels so broken, subscribe. Because in the next video, I am going to show you the commercial side of this trap. How the same firms destroying the housing market are also poised to trigger the next banking collapse through commercial real estate defaults. The trap is everywhere. You just have to know where to look. Don't be a serf, understand the pattern, see the trap, and find a way to own your freedom.